Welcome to the channel, where we dive deep into the fascinating world of hard-to-borrow stocks and the mechanics behind a potential short squeeze. Today, we're putting a specific name under the microscope: Liquid Aimed to Expire Therapeutics, Inc., trading as LABT. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Liquid Aimed to Expire Therapeutics, Inc., or LABT, is a clinical stage biotechnology company operating in the healthcare sector. With a current market cap of just $3.05 million, LABT is a true microcap focused on developing novel antimicrobial products from its bisphosphocin class, targeting a broad range of infections. Like many small-cap biotech names, LABT can be prone to significant volatility. Looking at the recent price action, LABT is up 4.66% today. However, over the last 5 days, the stock has fallen 19.20%, and it's down a staggering 48.21% over the past 30 days. Volume today sits at 249,303 shares, significantly lower than its 30-day average of over 3 million shares, with relative volume at only 0.1x its average. What is cost to borrow and why it matters? When we talk about hard-to-borrow stock, we're referring to shares that short sellers find difficult to locate and borrow in order to execute their bearish bets. The cost associated with borrowing these shares is called the cost to borrow, or CTB fee. Think of it like renting a car: the higher the demand and the lower the supply, the more expensive the rental fee. For stocks, this fee is typically expressed as an annualized percentage. When a CTB fee starts to climb well over 100%, and sometimes even into the hundreds of percents, as we'll see with LABT, it signals intense demand from short sellers and a limited supply of shares available. This is crucial because these fees eat into a short seller's potential profits, or even accelerate their losses if the stock price moves against them. Why this stock is hard to borrow right now. So, why is LABT currently flashing on our hard-to-borrow screener? The primary reason is its astonishingly high cost to borrow fee, which currently stands at an annualized 721.2%. Highlight CTB number: this is an extremely high rate, indicating severe difficulty for short sellers to find shares. The estimated float for LABT is quite small, at approximately 1.8 million shares. A small float means fewer shares are available for public trading and, crucially, for borrowing by short sellers. While we don't have current data on the exact number of shares available to borrow right now, this combination of an extremely high CTB and a tight float down LABT a composite squeeze score of 41.2 on our internal scale, not the highest, but certainly notable given the CTB. Squeeze mechanics explained. A short squeeze happens when the price of a heavily shorted stock rapidly increases, forcing short sellers to cover their positions by buying back shares. Imagine this: a short seller borrows shares of LABT, it sells them, hoping to buy them back cheaper later. But if the price starts to rise, fueled by buying pressure, the short sellers begin losing money on their position. Compounding this, they are paying that exorbitant 721.2% cost to borrow fee every single day. As the stock price climbs and their losses mount, they become desperate to close their positions. To do this, they must buy back shares. This forced buying creates even more upward pressure on the stock price, trapping more short sellers and leading to a cascading effect of short squeeze. Dilution risk check. One major factor that can completely derail a short squeeze thesis, even with high cost to borrow, is dilution. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This typically reduces the value of existing shares and can provide an abundant new supply of shares for short sellers to borrow, effectively crushing the hard-to-borrow condition. For Liquid Aimed to Expire Therapeutics, we found no recent diluted SEC filings like -1, -3, or 424BS in the last 90 days, which is a positive sign for a potential squeeze scenario. Recent reverse split watch. Now, something critical to note for LABT: the company executed a 1-for-1 reverse stock split on June 22, 2026, that was just 39 days ago. A reverse split reduces the number of outstanding shares, effectively shrinking the float and resetting the share price higher. For example, if you had 10 shares at $1 each, after a 1-for-10 reverse split, you'd have 1 share worth $10. Show illustration: historically, many microcap stocks, particularly those that have undergone a reverse split, tend to see renewed volatility or even a price pop within about a month after the split takes effect. This is a pattern observed in some instances, not a guaranteed outcome, but it's an important element to consider for LABT given its recent split date. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what should you watch for with LABT? The incredibly high 721.2% cost to borrow is a screaming signal of difficulty for short sellers. Combine that with a small 1.8 million share float and the recent reverse split, and you have the ingredients for potential volatility. However, it's crucial to remember that high cost to borrow does not guarantee a short squeeze. It can also signify that short sellers have very strong conviction in the bearish thesis and are willing to pay high fees to maintain their positions. Keep an eye on the volume. LABT's current volume is significantly below its average, indicating low liquidity today. A significant increase in buying volume, especially on green days, would be a key indicator to watch. Liquid Index Biotherapeutics Inc. Lab presents an intriguing case with its sky-high cost to borrow and recent reverse split. While this setup points to short seller stress, diligence and understanding of the risks, especially with microcap biotech stocks, are paramount. Remember, this information is for educational purposes only. If you found this breakdown helpful, please hit the like button, subscribe for more deep dives into hard-to-borrow stocks, and let us know in the comments below what other stocks you'd like us to analyze. Thanks for watching.